Hey guys, it's Reddy from Wealthy Options. Welcome to 28th episode of 0DTE Pulse. Today was Sensex Expiry. So we are going through a back-to-back of challenging the expiries, and today expiry was also challenging compared to the expiries that we have seen in the month of July. So going into the details, Sensex opened with a gap of almost like a 900 points, which is a huge gap up, and especially on an expiry day. So the reason for the gap up is, as most of you know, it's mainly because of the back of the the GST reforms announced by the GST Council yesterday evening after the market hours, and so that was quite taken as a positively by the market. So that's why this gap up opening. But what happened is, so out of this 900 points gap up, so almost like a 400 points Sensex has given up 400 points in the first 5 minutes itself. So you can see the big red candle here. So this is where it lost 400 points out of 900 points. So after that, so then there is a bit of a try to go a reversal of almost like a 300 points and 250 or 300 points. It tried to go to the day top, but again it was sold into, and then so it kind of formed a pattern of lower tops and lower bottoms. In fact, at some point Sensex gave up all the opening gap up gains, and in fact this particular candle and all, it filled the gap also, and finally it closed with a nominal upside of almost like I think probably 200 points, so not more than that. So from the news point of view, so today we can say this news is factored, but given the reforms are so they are kind of big reforms, but it's disappointing to see that so this up move is sold into. So coming back to the premium and how the trades went on. So one good thing because of this big gap up was the premium straddle premium. It almost opened at 430 or 440. I think it was 438 or 39 at 916 when my first trades took. So which is a really a good premium in current days, especially during the ultra low VIX period, ultra low IVs period that we are going through, and especially the Sensex straddle yesterday closed I think around 350 or 360. So it opened with a gap up of almost like even the straddle premium is opened with a gap up of almost like 80 to 90 points. So though it was a big gap up, I thought so given the premium, so the day is going to be good, but Sensex had other plans obviously. So the opening premium was good. So 435 or 440 is the premium, the my first trades captured, and then by 920 itself the premium melted by almost like a 90 to 100 points. As you can see, by 920 the premium available was almost like a 340. So there, whatever the strategies, my system entered between the 916 and 920. They got the good premiums, but the problem is these good premiums we were not able to keep it till the end. So because of the volatile nature of the Sensex in the first half an hour, and then even later also. But let's see how the first half an hour played out. So as you could see, first 15 minutes, this is kind of a small range, and the premium was consolidating, like some small stop losses hit here and there, but overall the the trade was in a profit. I think by this time I was in a profit of almost like I think 2% or something, I think 0.15 or 0.2%. But this particular candle, it kind of gave an impression like it's going to go to day high again. So because of that, calls again saw a huge short covering. So as a result of that, most of the calls, not most, I think all of the calls, whatever my system had, so they have suffered the stop loss. And if that had continued, at least it would have been a trending day, and we would have fetched the profits from the puts. But that's not happened. Immediately you can see a red candle, and then so it kind of tried to consolidate, but the toughest thing was from 9:30 till 12:30 there was absolutely no decay at all. right? So the premium was not decaying at all. So it was for today, after a long time, it kind of gave an impression like it's a kind of a Jane Street regime, where the Sensex was nicely consolidating, so during this period and almost nicely consolidating, but there was no drop in the premium at all. And even after that, whenever there was a drop in the premium, it always came with a one side move where it hits the stop loss and then the decay starts, and then there was an immediate reversal. So that's how the entire day played out. So during this period, so you can see that, so by 9:30 the premium was almost like a 350, and you can see the almost like a same premium, like almost like a 300 and 320 up to 12 o'clock. And even so there was a small dip in the premium, but again it gained. So if you see, literally till 12:30 there was no meaningful decay at all. So all the strategies, that entered in the morning, so they have gone through this volatile nature of entering one side and hitting the taking the hit on the calls, and then on the put side, and all this. And because of that, most of my the strategies that entered before 12 o'clock, they ended in loss, some in a big loss actually. So the morning was quite challenging. And so these particular candles, when the day low was broken, so this has pushed the put premiums higher, and that was not continued. Had that continued, some strategies which entered after 9:30 and all, they would have had calls, they would have made a profit. But then again there was immediate reversal. So you can see that these are all maybe a small V shapes, but the problem was these reversals actually kiss the stop losses of calls, right? And the best thing is there was a consolidation, but whenever if somebody see that this kind of a consolidation, especially on expiry day in underlying, so one would expect the premium would have decayed a lot, but that's not happened. So the losses were not coming down. In fact, they were almost like a slightly mounting up, with every entry taking beating one or other side. The real kicking came actually here. So this particular time, around 12:10 and all, it even broke the day low. And here whatever the puts were there in the system, they took the beating here. So those puts stop losses hit, and then immediately there was a V shape, and here the calls took the beating. I think this is when my trades almost went into 0.5% kind of a loss. So the loss increased from, I was in a profit of almost like a 0.15 to 0.2 here, and then it came to a 0.5 loss, right? And then again there was a bit of a consolidation, and gave a hope of a slight recovery, but that didn't last for a long time. And these particular candles, so it broke the swing low. So earlier during this phase, when the most of the calls were taken out, so the strategies which entered here, they had a puts, those puts again took the beating here. So this is how the day went. So you go and hit the calls, and then come back and hit the puts, and then go after the calls, and then come back after the puts and all actually. So that's how the day went. So here also same thing, and especially this particular time, around 14:15 and 14:20 onwards. So it broke the even the day low once again, and in fact this is when it actually filled the gap. So here again the puts went crazy, because this not only broke the day low, and it actually stretched bit beyond, and the candle size also was bigger. So and then there was immediate reversal. Some calls were left out during here, but when Sensex started reversing, especially if you see these kind of a candles, so this gave kind of gave an impression like it's going to go like this. So that is when people will try to cover their shorts, call shorts and all, which will lead to the IV spikes. So this is when again calls started taking hit, and I think if I remember correctly, this is the time my system, my open positions had a maximum loss of almost like a 0.7 to 0.75%. So if you see that the real decay, so I said up to 12:30 there was no decay from 9:30 onwards, and even after that, so from 12:30 to kind of up to 1430, so which is up to 230. It's a decay of only 80 points. It's expiry date, so there was no linear decay, and there were a lot of ups and downs, and real decay actually started from 230 onwards. So you can see that this is a very steep decay, but out from 230 till 245, in fact 250. So there was no the system was not able to capture the profits because the Sensex was dancing. So it went down, and then it started reversing, and it formed bigger candles, and then again reversals. So almost up to 250. So there was no there was no scope for reducing the losses at all. Of course, during this phase, some strategies, which entered after 230, they started making the, good profits, because they, from the time, they entered, the decay was, very aggressive. So those survived, and then I think finally Sensex kind of gave a little bit relief from, after 255 onwards. It stayed quiet, after dancing throughout the day. It stayed quiet for the last post 3 p.m. Post 3 p.m. times. There was no big surprise after 3 p.m. I would say, actually. So even 255 candle, it's it actually made some of the strategies to take a hit, but from 3 p.m. onwards. So today is the day. After 3 p.m. most of the losses recovered. I think I was, as I told you, I was in a loss of almost like a 0.75% around here, and when it came down, so my loss came down almost to 0.1%. In fact, it was like 0.09%. That's how I ended. So so it was a challenging day, and if you see the MTM, so where is the MTM? Yeah. So if you look at the MTM, so the MTM, so as I said, the morning first 15 minutes was the only time the strategy was in a overall my positions were in a slight profit, like 0.2% or whatever. After that, it's continuously getting into the loss. This is when the system witnessed a maximum loss of 0.75%, and in fact, it is after the 230, 240 onwards, the losses, system started recovering the losses. Finally, this is for one account. Finally, the account ended with a loss of 0.09%. So, which is something, this account ended with the 20K, and this one with almost like 2,600. And this one, so leaving this particular investment, so this ended with almost like a loss of 17K. So overall, it's a loss of 40K. So which works out like a 0.09% on my account size. So first two expiries in the month of September, they started on a challenging note, and we are living in a kind of a in a regime currently where the premiums are pretty low. Today was not that case, but there was no decay. But in generally, the premiums are pretty low, but the underlying is making a bigger moves, and so because of that, the making a profit on these expiries back to back is becoming a challenge. So I hope that this this regime will take a shift. These are all kind of a cycles we go through in terms of a trading. Sometimes we'll have a fat premiums with extremely high volatility, and sometimes we'll see a phase of premiums reaching to the fat, and the IVs are getting richer, but then we'll go through a phase of IV falling, or VIX falling, whatever we call it. So during that time, we'll have a better hand, like better opportunities to make the profit. And then the low V IVs are periods are challenging, but sometimes the low IV periods, even the low premium start, something like Sensex starting at 300 350 also will surprise us with like 0.5 or 0.6% of profits. So I believe that so that days will come back. So I think from the last probably I think 5 6 or 8 expiries, so we are going to going through the phase of sometimes profit and sometimes loss, but overall the losses are not big. So I mean my current drawdown is almost like just a 0.6. So 0.6 is not a big drawdown on the account size, and considering the number of strategies I'm running and all. So let's see. I mean, let's hope that the things will come better, and we may get either better premiums, or the underlying starts trading in a narrow range, or they will trade smoothly, and all the expiry traders will be able to make some money. So I think with that, I mean, I don't have anything more to share today. So at some particular point, I mean, as I mentioned in the last couple of expiries, I mean, at some particular point, I mean, I was left out with only the call options and not the put options. I mean, all the put stop losses were taken away, only calls were there, and I was in case if there was a big reversal, I was trying to see, I mean, how we can able to protect the some of the call options. I think I deployed with the small quantity. I mean, deployed like I bought the 80,000 call options, and sold 80,000 I bought the 81,000 call option, and sold 81,100 call option, which is a spread of 100 points, and the net debit was like I think 20 or 22 rupees. So it's a risk of 20 rupees and reward of 80 rupees, which I did it like for I think for every 4 calls in the system, I did with one quantity. So which actually worked out, I mean, during this upside phase, but then again market fell. So the purpose of the trade was to mainly to protect the existing calls in the system. So some calls left out. I mean, that if that move continued, I would have captured 80 points, but then that move did not continue, and those some calls which were left out, anyway, they decayed. And this particular the debit spread whatever I launched, I think the maximum loss itself was 20 points actually. So I think I closed it somewhere like when there was when it started falling, there is no need to hold that particular additional strategy, mainly to protect the existing calls. I think I closed it with a loss of, I think somewhere like 13 or 15 points in that particular one. So otherwise there was no other interpretation. I mean, there was no other intervention in the system. So I left the system as it is, and system gave a loss of 0.09%. So that's all. So with that, I'll see you in my next 0DT Pulse episode on Tuesday with the next Nifty expiry. So until then, take care, and don't forget to like and share this content, and I'll see you next week, and take care. Bye.